Hi, I'm Brandon Christie from Christie Capital Management with your June 2015 Educational Economic Update. In this month's video, I'm going to talk about some of the major economic headlines from last month and give you some insight into what they might mean for markets and for you as an investor. Please stay tuned at the end for a required disclosure statement. Greece dominated headlines last month as negotiations struggled to reach a deal between the indebted country and its European creditors. On the U.S. side, investors dealt with a Federal Reserve meeting as well as a better than expected May jobs report. Well, in June, Greece took center stage as negotiations over bailout money faltered, forcing Greek leaders to push the issue to voters in a referendum. Greek banks shut down to prevent a run, also limiting ATM withdrawals to prevent panicked Greeks from pulling out all of their money. In the weeks ahead, we'll be watching for more news from Europe as the fallout from the Greek crisis starts to land. Though the situation may be a tragedy for Greeks, we don't expect to see significant issues in the U.S. And that's for two major reasons. One, Greece is not a big contributor to the global economy. In fact, the whole of GDP for Greece is approximately 50% of that of Georgia. Number two, Greece has been in various stages of crisis for years. At this point, economists, investors, government leaders are as prepared as possible for the crisis. Though we can't predict the future, we believe that the effects of the Greek situation on U.S. markets will be limited. We might see a short-term pullback as investors adjust to the uncertainty, but we can hope that attention will return to the domestic fundamentals. Well, the Federal Reserve Open Market Committee met in mid-June to discuss the current state of the economy. Though they didn't raise rates, Fed economists reiterated their commitment to the wait-and-see approach. We don't yet know when the Fed will begin raising interest rates, but a number of Wall Street experts are betting on a third quarter rate hike. Are rate expectations already baked into the stock and bond market? Well, it's hard to know for certain, but the Fed has been doing a good job of laying the groundwork for future rate moves, so we can hope that markets won't overreact when rates start to go up. Domestically, the economic picture is looking brighter. The economy created more than 280,000 new jobs in May, beating expectations. Though the unemployment rate ticked a little higher to 5.5%, it came as a result of more people looking for jobs, which is a good sign about the labor market. The final number on Q1 economic growth showed though the economy contracted in the first quarter, it only fell by 0.2%. And this is better than expected and hopefully paves the way for a stronger second quarter. So far, estimates on Q2 growth range from about 2% to over 3.5%. And looking ahead, investors will be taking a close look at earnings reports from the second quarter to see how U.S. companies did in the past 3 months. We'll also be delving into economic reports from the first half of the year. All told, we have a substantial amount of information coming at us in the next few weeks. Well, as always, we're keeping a close eye on markets and will update you as necessary. Thank you for watching the June Educational Economic Update. If you have any questions or concerns about what we've discussed, please give our office a call at the number below. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, give us a call at 866-331-7749. It's our pleasure to speak with you. Well, this is Brandon Christie with Christie Capital Management and your June 2015 Educational Economic Update.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.